My intuition tells me that we're going to see lower grain prices in the future for an extended period of time. To me, it's just a fascinating time to be alive. There's a change of the world order happening.
Farmland is really not very liquid, not liquid at all. So how do you apply this technical analysis to something that's not so liquid?
The one thing that's really has never changed through the millennia is our behavior. So, we want more things that make us feel good, and we want less that make us feel bad. And that really, fear and greed seem to drive our decision making. So I started applying it to alternative asset classes like red lentils, durum wheat to cash markets, and demonstrating the effectiveness in those markets. Conditions are usually different each time, but human nature remains the same.
Hi, everybody. I'm Tim Hammond, President, Founder, CEO, and broker of Hammond Realty. We are a farmland real estate brokerage that specializes in agricultural real estate in Saskatchewan, looking to go across Western Canada. So anyways, today I'm here with my friend Trent Klarenbach, and I'm super excited because we're going to have a really stimulating conversation about farmland values from a technical perspective. So Trent has an expertise in technical analysis, and he's applied that to Saskatchewan farmland values over the past 100 years. So anyways, I'm super excited about where this is going to go and the insights that we're gonna see. So so Trent, maybe just introduce yourself a little bit and tell us about your background and history and how you got into this.
Well, thanks, Tim. It's a pleasure to be here. And yeah, we go back a long way. I met Tim when I was 16 years old at a slow pitch tournament at Erie Park, Saskatchewan, and followed Tim through the University of Agriculture. And in my first year of ag, I remember trying to rescue Tim from the engineers. They had him strapped up to the E plant in the University Bowl in Saskatoon. So that was quite an experience. And then, a lot of history, and we've been in and out of each other's lives for the last 38 years.
Yeah.
So it's been great. So.
Yeah. We were also kind of in entrepreneurs organization together, which is kind of a peer support group for entrepreneurs and just helping us to think better, grow personally, professionally, and with our families too. So that was also a great experience that we shared together. So
yeah, it was really neat. We actually started the same time, the same day, without even knowing the other one was going to be there, and ended up in the same forum. So that was really cool. So it's nice to get reacquainted after those years in the university. And as Tim was saying, I use technical analysis in the grain markets and the grains and oilseeds and special crops, introduced technical analysis to special crops, and that's been quite effective with getting an idea of where the prices can go and where the trend changes and where the trend stops. So it's been a great experience. And again, I'm happy to be here and excited about talking to you today.
Yeah, me too. So basically the purpose of this conversation is just to take a look at Trent's in-depth analysis, technical analysis of farmland values, and gain kind of perspective out of that. So 3 things that we're going to talk about kind of in there is just kind of the framework and the approach. Trent will just kind of introduce kind of what he did, why he did it, and how he looks at it, and then he'll talk about the analysis part of it, go into more technical kind of details, and we'll be showing our screen in here so that you can see what we're talking about. And then, just also we'll touch on kind of the challenges and limitations to this. So obviously farmland is a slow moving asset, and this is kind of a different way of looking at it. But, what are the challenges, with the data and everything, and how you kind of normalize that to do the assessment. So, so sound good?
Sounds great. Yeah, I'm looking forward. Let's get started.
Okay, awesome. Sure. Anyways, what made you kind of consider applying technical analysis to Saskatchewan farmland values?
Well, there's a few instances or conversations, I guess, in my life here, and a few experiences. So my son introduced me to technical analysis and how it can be applied to all asset classes in the world, and how technical analysis it's a study of the psychology of the marketplace, a study of the psychology of the market participants. And each one of these markets, there's one common participant, and that's us human beings. And the one thing that's really has never changed through the millennia is our behavior. So, we want more things that make us feel good, and we want less that make us feel bad. And that really, fear and greed seem to drive our decision making. So I started, applying it to alternative asset classes like red lentils, durum wheat, the cash markets, and demonstrating the effectiveness in those markets. And when it came to farmland, I always had the idea about it, but I didn't put the time in. And one day, Kevin Gunn from Tyner, Saskatchewan, he called me, and a good friend of mine, and he asked me if I've ever used technical analysis for farmland. And Kevin commented to me that he sees like there's it looks like a wave 3 or possible wave 5 in the Elliott Wave theory framework in farmland. I thought, that's interesting, Kevin. And then he mentioned that farmland had retraced 61% or 60% from the high of the 80s to the low of the 90s, which, if you're into Fibonacci retracements and using that as part of your technical analysis, that number really resonates with you. So, with Kevin's encouragement, and that conversation got me, let's dig a little deeper into this and see what else we can find.
So cool. So you decide to, kind of investigate on that. Where did you go to get your data, and what did you have to do with it to kind of clean it up?
Yeah, so the data is difficult. I found that getting the data somewhat difficult. So you want to get your data back as long as possible, and I was able to find StatsCan data that went back to 1921. So their calculation for farmland and buildings, dating back to 1921. So that was the longest data. I'm assuming it's a consistent methodology in their approach to determine that calculation.
Right.
And I believe it to be consistent over time. So, what I did is I took a look at that, and you run into some challenges because I think it started out at around $29 in nominal terms to their value is over $2,000 now, right, per acre. So it's really difficult to show that onto a chart.
Yeah.
So I took the nominal values. I used the Bank of Canada inflation rate calculator, and I used $2023.
Okay.
I priced the farmland on $23 values.
Okay, so your analysis is everything's in $2023 then?
Yes.
Okay.
Yeah. So what that does is it gives you an idea of the purchasing power of Saskatchewan farmland per acre in the last since 1921. So that's a little over 100 years. And if you can, if Saskatchewan farmland is determined or considered to be a store of value, a hedge against inflation, then I believe that converting the nominal values into a real dollar term or calculation, real dollar value is a great way to do that assessment.
Yeah, I would agree with you too. So it just kind of, it's more of an apples to apples kind of analysis anyway. So
I think so. Yeah.
Yeah. So what specific tools or indicators are you using when you're doing your technical analysis?
There'd be hundreds, maybe thousands of different indicators and tools to use. It's quite a deep rabbit hole when you go into technical analysis. But really, you want to be able to identify the trends. You want to use trend analysis. So you want to be a trend follower. So the best way to do that is just to identify where the trend starts and where the trend ends. And you really want to, I believe in using the KISS principle, keep it simple, stupid, I guess, and there's I don't think there's any use in really over complicating things, especially because really all we're really interested in knowing is where the trend of farmland's going. And for the most part, it's been up.
Yeah.
But it hasn't been up all the time.
Yeah.
So we look at, common tools you use are support and resistance levels. You use trend lines. You often overhear the term something is overbought or oversold. And they're referencing that to the relative strength indicator, the RSI. And then, of course, I'm a Fibonacci advocate. And you can actually use I like to be aware of the technical one, the wave count using Elliott Wave theory. And Elliott Wave is an indication of something that can happen. It's very imprecise, but it gives you an idea of where the prices can go.
So, like, farmland is really not very liquid, not liquid at all. So how do you apply kind of this technical analysis to something that's not so liquid?
It really behaves in a similar manner to liquid assets, in my opinion. The S&P 500, you want to talk gold, you want to talk bonds, currency, cryptocurrency, and the chart patterns, in my opinion, all look the same across various time frames.
That's very interesting. So when you started investigating that, did you kind of see similarities right away, or how did that kind of spark your interest or more questions, I guess?
Well, I guess it started really with Kevin's comment on the Elliott Wave count. And again, Elliott Wave is not, I'm aware of it. There's a lot of debate over its usefulness, but basic principles is markets move and there's 5 impulse waves up and then there's 3 corrective waves. And you can actually see that in Saskatchewan Farmland value chart. And so I got looking at that and you start, when I did the calculations, created the real values and charted it on a logarithmic chart. And you can see where previous resistance has acted as support.
Oh yeah.
And we're testing trend lines, and it's quite fascinating. And you see in my opinion, when I look at those charts, it behaves in much the same manner as other assets.
Yeah. Well, I've been itching for Trent to show the chart. So maybe this is as good a time as any to kind of introduce the chart and then, share what you're seeing in it and what you're looking at, what you're looking for, and, what all this stuff means anyway. So okay. I don't know technical trading that well, so keep it simple.
Yeah. We'll keep it. I'll do my best to keep it simple.
Okay, thanks.
And I think it's fascinating. So this is a chart I created here. And it is a chart of the real values, Saskatchewan farmland priced in real values to $2023. And the reason $2023 is that's the latest data that I have I'm access to it through Stats Can. So I just priced it to the last year. You'll see this chart. It's I mentioned earlier, it's a logarithmic scale. So if you look at the y-axis on the right, the lines are placed exponentially. So what that means is on a typical chart, you'll see it's called the linear chart. And a linear chart will have equal increments going up the y-axis. Well, the challenge with that is when you have a long time frame and in a quite a large variance in the price from say, $29 land values all the way up to 2000s, it's really difficult to see any significant price changes. And it's important, in my opinion, to understand that a movement in the price from $100 an acre to $200 an acre is real. It's a 100% move. It's really the same as a move from 1,000 to 2,000.
Right.
It's difficult to show that on a linear chart. So I like using a logarithmic chart for my analysis. So what I did is I created this chart in black. The line is the price of Saskatchewan farmland in real dollars, price in 2023 dollars. And you can see we had a high back here in 2021. We came down to a low, I think it was in 1941. And we saw this variance in the price throughout time. And I drew these trend lines on here connecting these yellow trend lines. And it's really an upward channel. And, that's a sign of a strong uptrend when the price is within that channel. And we're certainly testing the peak of that, or the top of that channel right now. The bottom line here, the bottom panel in blue is the relative strength index. And again, I mentioned earlier that signals overbought and oversold conditions. Whenever you hear, most of the time 9 times out of 10, when you hear someone say, well, canola's overbought or wheat's overbought, they're likely referencing the RSI. So when you're over a score of a value of 70 on the RSI, that's considered overbought.
Okay.
And when I use the RSI on here, you can see some really significant, to me it's really significant when you can see these extreme overbought conditions, 85, 91, And today we're sitting at around 96. I mean, those usually, that's a sign that's overbought in those terms, and it's a caution flag to just, we might be approaching the end of this rise crisis.
Yeah. So, when we look at this right now, we're very high relative strength, kind of 96.2 in the past. So we kind of take a look at, kind of the late 60s, it looked like it peaked and then kind of dropped off there. And then also in the 80s, and we know what the 80s was, right? And how it kind of retraced back from then. So, so when you look back at kind of history and you see the relative strength numbers, that kind of confirm, the, I guess, kind of the validity of this, right? Or kind of the statistically kind of valid, kind of approach to it or whatever.
Yeah, exactly. The more indicators that you can find that line up with a thesis, the stronger your conviction can be, right? So now when you talk about overbought, you can be overbought above the 70 value in RSI for a very long time. That go up, it's another indicator to be aware of. You want to be aware of those values, prepare you for a downturn in this situation. But there's no one indicator, in my opinion, that tells you when to buy or when to sell.
Right. You kind of you reconcile everything together, right?
Yeah.
And kind of go with your gut a little bit too. So, anyways, when we're looking at this chart, what are you talked about retracement and that sort of thing. So what do you kind of see here?
We often hear the term that it's different this time, and conditions are usually different each time, but human nature remains the same, in my opinion. So, we can talk, we saw a decline from approximately 1922 to 41. That was a 54% decline in the real price of Saskatchewan farmland, which is pretty significant. That took 19 years.
Yeah.
So if you bought 1922, it didn't stop going down for another 19 years. And I think it took to somewhere in the 60s before the land values got back to that level.
Right, to equal dollars.
So a friend of mine told me the secret to success in farming is timing.
Yeah.
Timing. And timing. The three secrets, right? So, depending on where you are. But if you bought in 1941, sometime during the war, right? Or even in the 50s, and that was a good opportunity. And you can see by this chart, as you start making higher highs and higher lows, it's a sign of an uptrend. And once you break through that resistance, this is a resistance level we saw, in the mid to late 50s, we saw a real rapid value increase in land values to the 60s.
Right.
Again, in 68 to 73, there's a roughly 21% drop in land values.
Right.
That's significant.
It is, and that was kind of, I remember kind of going back through history as kind of the lower inventories for tomorrow, right? Yeah. And lift program and, and having a quota book and not being able to sell your wheat at all, right? So that kind of shows up in this chart, doesn't it?
I think so. And, and that was a significant time because you mentioned that not being able to sell your wheat. And that's when Raymond Somerville took the Canadian Wheat Board of the government to the Supreme Court of Canada, opened up the interprovincial sale of grain. It was illegal to sell grain grown in Saskatchewan and Alberta at that time without going through the Wheat Board. And he opened that up. And so that was there's all sorts of stories from my side of the province, my community of guys buying grain, shipping grain out to flour mills in British Columbia and feed mills in Alberta. And it was guys, car dealerships had grain bins on their lots. The guys needed a car repair or needed a new vehicle. Well, they couldn't sell their grain, but they could deliver 1,000 bushels or 500 bushels. Yeah. So it's different time.
In real dollars, right?
In real dollars, yeah. It was and then those dealerships had to do something with it, right?
Yeah.
Some neighbors had some markets for that. So
cool. Yeah. So then it kind of, from the early 70s up until the early 80s, it actually looks like a pretty rapid ascent. Is that normal? Is that typical, or?
Well, I would say that's a parabolic move. And,
Okay.
We talked about, well, I guess when we talk about it, but there's, the 70s were, started out with that great grain robbery, right? And then there's a whole host of factors that went on there that I think contributed to this, Tim. I think there was the great grain robbery. I think it was Nixon, was it 71 with the gold standard? I think that contributed to an inflation. I think Mark Rich when he created the spot price for oil around that time too. And we saw oil values really start to rise. Before that, it was basically sovereign nations, and it was just long-term deals cut, and all of a sudden the swap price was created. Then we had oil embargo, and there's all sorts of inflation. And there are a lot of contributing factors to there at that point in time. I think it's a really fascinating study, and that really peaked in 1981. Yeah. And there was high interest rates then too, right? Double digits, or in the 20s. And
kind of a combination of everything. It really was kind of a recipe for, it was overbought, right? And it's maybe a time to sell and kind of get out. So
central banks rose. The inflation was rising so rapidly that they tried to control it with interest rates. Slow it down, and eventually they did.
So like in terms of real dollars, then land values really kind of slid for like a couple of decades, right? Like 20 years.
Yeah, from 81 to 93, that was a 12-year drop before we found the bottom in Saskatchewan prices. And then it took, I don't have it on here, but it's like 32 or 34 years before land values got back to the high in 81. That's a long time. That's a long time to... It's a long time to wait for the
right. I mean, if you looked at this with, canary seed or canola or whatever, it could be like 2 years, 3 years, right? But we're looking at decades, right? But the principles kind of are still the same.
The principles still the same.
With the technical analysis, right? Or I guess the time cycle, right? Like in a commodity, it might be a 2 or 3 years, whereas in farmland, it's a 20-year.
Yeah, definitely. And there's some commodity cycles I don't think I'll get into when I finish my report, but there's 46, 60-year commodity cycles, and it's a bit too wide a range to really, I think, to really spend too much time talking on. But I mean, commodity cycles. I think they're immune from inflation. Actually, is my own opinion, but I don't think inflation. I shouldn't say they're immune. I don't think they factor in the price. The price of commodities don't take inflation into consideration, in my opinion. So it kind of dropped over those 12 years. And so that drop, how much was that drop? Well, that was approximately 60%, so 63%. So if there's a ratio in the Fibonacci retracements, in the Fibonacci studies that we use, is a 61.8% retracement, and that shows up in nature. It shows up in the markets. It's somewhat self-fulfilling in markets. So what happens is in the markets, when you get a 61.8% retracement, a lot of times the algorithms and people will start buying at that level. I guarantee you nobody was looking at it. In Saskatchewan Farmland 1993. But that's how much retracement we had.
And I guess my experience is, I was working at Farm Credit Canada. I started in 1991 and worked there for 11 years. So it was kind of right at the bottom of this. And, we did a lot of debt settlement and, took some land back, and quite a bit of land back, but I remember talking with farmers, and, we were selling land for, $300 an acre, $200 an acre. And I'm like, how come you aren't buying more of this? And they're like, well, we want to, but financing's an issue. You got to convince the bank. And it was interesting because, fast forward another 10 years and the bank started to have a little more confidence in that. They started lending money. The farmers wanted to do it all along, right? But it was the lenders that were kind of holding them back on it. So I think that's kind of interesting anyways.
Yeah, it is interesting. And, that was a period of time there would have been a liquidity issues, right? Or maybe a crisis in that matter, depending on who you were. But, and it evolved into a balance sheet issue.
Yeah.
So, you weren't able to pay your bills, and then the lenders started calling in loans.
Yeah. Well, even from farm credit standpoint, like they received an injection of $800 million to deal with all of this stuff too. So not just, it wasn't just farmers that kind of needed it, also the lenders, too. So interesting.
Yeah, it is fascinating. And you just kind of wonder what would, if we are getting close to the peak, or getting close to a retracement.
Yeah.
In land values, what will be the drivers of that?
Yeah. Well, that's what, fast forward to today's value, we got a high relative strength. Is there, a chance it could still keep going above that channel, Trent? Or, what are the odds? Or what typically happens?
Well, so I like to refer to these levels as levels of interest.
Mm-hmm.
So you have an elevated RSI level. You have a trend line. I do think there's, you start applying some Fibonacci extensions in that way. I think, we're at this valuation's at 2,700 right now. You can make an argument for 3,200.
Right.
So I'm not getting the sell signal yet, but it's an area of interest. And when I start, there's enough of this fundamental side of me too, with the ag degree, as you're looking at, where's the world going with exports, and there's been a bit of trade disruptions going on right now.
Yeah.
There's talk of, you hear that recession talk, and that'll impact people's purchasing power, and you just don't know, but it's definitely a level of interest to me. There's a dotted line on there in red, and that's my 2-year exponential moving average. So
Tell me about that.
Okay, so the 2-year, so moving averages are a great way to determine the strength of a trend, and maybe where it's been to, and give you some insight to where it can go. The exponential moving average puts more weight on the near time frames. So a 2-year, really short in nature. But what I've found in the past, when the price has dropped down and dropped below the 2-year exponential moving average, that has been a great signal for these pullbacks in price.
Okay.
And, we saw that in 2020 or 1921. That was a 19-year, 50% retracement. We saw another one in 68. That was only 4 years, but that was 21, approximately 21. Speaking of proximities here, or approximate values. And then, of course, in 81, we broke below that 2-year EMA. And that was for 12 years and went down 60+%.
Yeah.
And we're not there yet, but with today's calculations that I'm using, a 5% drop in Saskatchewan land values suggests that further downside is in the works.
Yeah, very interesting. And I guess I look at, because we're involved with, listing and selling farmland, and, tons of negotiations, and, there's a lot of psychology in that too, and really since about 2010, what we have noticed is inventory it was shorted, right? Like people didn't want to sell, right? And so when there used to be 800 farms for sale on the market in January, that started dropping. And really from about 2012 up until probably 2 years ago, that dropped. It dropped from, 800 farms in January down to 200. So if you're a farmer looking to buy, right, it's really tough to buy because nothing is available for sale. So, you have limited supply and all kinds of demand. Well, that drives the price up, right? And it propels it up. And really, that's kind of what I've seen here, and your chart is really showing that. What's interesting right now is that over the last couple of years, we are starting to see farmland inventory, farms for sale, increase. It's kind of moved from 200 farms in January to 300. And so that's really like a 50% increase. And it's not enough to slow down values because there's still tons of demand out there from buyers, and they're still competing heavy for it. But it's a trend that I've noticed. Anyway, so And then actually too, if you take a look at Farm Credit, they have this amazing metric. It's the, the land affordability index, right? And so they rank each province, based, affordability of land based on the amount of money that it can generate. And, Saskatchewan is actually in Western Canada, it has the highest affordability index, which means it is the most expensive to buy with just the proceeds from the land. So there's another metric that is saying that, okay, it's getting tougher and tougher to make farmland cash flow itself.
That's interesting. Yeah, it's interesting. When you mention that, is because I always hear how Saskatchewan farmland is cheaper than anywhere else in the world. But in affordability side,
yeah, in terms of affordability, it is jumped. And I mean, Farm Credit's got an amazing chart on that. Maybe we can show that, here as well. But 10 years ago we were low. We were right. And because of that, the investors came this way. Investors aren't location specific, land specific. They are rate of return specific. They're looking for opportunities, right? And so they saw that as an opportunity, and it was an opportunity, right? Yeah. Fast forward to today, it's actually more expensive in Saskatchewan, marginally, than it is in Alberta and Manitoba. So
that's interesting. Yeah, that's that narrative isn't well known, I don't think, or well spoken about. So it's interesting to hear that.
No. Well, anybody looking to buy land, they buy it, but they're thinking this, right?
Yeah.
And usually our advice to people is, it's never been higher. It's never been more expensive in terms of affordability. But if it's strategic to you and you're looking 20, 30, 40 years down the road, then do it, right? Just look for ways to mitigate your risk while you do it.
Yeah. Yeah, and in my experience, I've always felt farmland has always exceeded always sold for a number greater than the financial feasibility of it.
Yeah.
And there's a lot of reasons why that is, and they all make sense to me.
Yeah.
As a farmer.
Yeah. Well, I tell you, for 40 years, I've been hearing land will never pay for itself, but somehow it does.
Yeah.
So, but I think there's that also real asset component to it, right? Which is sure it's farmland and there's cash flow, but it's also a hedge against inflation. It's, X amount of barrels of oil. It's how many gold coins, right? There is a store of wealth in it, and sure, farmers use it to produce, but it's also there to kind of store wealth as well.
Yeah. And I know of very few assets that are easy to borrow against.
Yeah.
And it's a low maintenance asset. There's no roof to put on. There's no grass to cut. There's no toilet to replace. And
So if you were, you got a client on your newsletter kind of subscription list, and he asked you to pull up this chart, and he says, like, what do I do, Trent? If you look at this, what do you say? What do you say be aware of?
Well, I mean, I think we need to be aware of where we are in this chart. I mean, it's again, my sell signal on this chart is not triggered, but I mean, if this was...
But you're approaching it. Is that right?
Well,
potentially?
It's like a 5% drop triggers it. So I really want to be aware of, we're at that trend line. If I believe technical analysis, which I do, this is an area of a level of interest where, okay, would I be, like myself, I wouldn't be buying at this level.
Yeah.
My risk might be higher. My risk might be lower buying it above this level. If that makes any sense.
Yes.
But right now it's okay. I want to be cautious here. I want to see how the price reacts to this level and go from there.
Yeah. Yeah. And just like purely speculating, let's say it does kind of drop 5% and then it starts to drop, a little bit more. Like how sticky is it kind of coming down? Like, what would you anticipate?
Well, I mean, it took 19 years, 100 years ago to drop 50%. It took 4 years to drop 20% in the late 60s and 70s. And then it took 12 years in the 80s. I mean, so, I think, if that discussion, I guess, would need to, there's a lot of factors at play, right? Balance sheets of farmers is one. Alternatives to other investments. Now, I think we're in a really fascinating time right now. I mean, we've gone through this period. Land values are really, they bottomed at 93, and I bought a vehicle, a pickup truck in 94 I got single digits on that interest rate, right? That was the first time in, I don't know how long we had single digits, 20 years in interest rates, right? So we're starting to see bond yields rise. There's a whole lot of things that could happen that could, make other investments more attractive.
Yeah.
My intuition tells me that we're going to see lower grain prices in the future for an extended period of time. And when I say the future, I don't mean the next 3 months, but 6 to months out or 12 months out, and for a few years. That's going to drive some liquidity or impose some liquidity challenges.
Yeah.
And how sticky can it go? So when we talk about technical analysis, we talk about support and resistance levels. And when we look at this chart, we can see the price came back from the 1968 high and found support at the same level as 1921.
Oh, yeah.
In real dollars. The pullback from the high of 1981 down to 93, that found support at the previous resistance levels, right? The previous support at 73, the previous support in 22. Now, if this was any other asset, I would anticipate a pullback down to the previous high of 1981.
Okay.
Test that previous high. Now, just to give some support to this, you can see this happen on every chart everywhere where, my readers would know I talked about this a couple years ago 2 or 3 years ago with red lentils and canary seed. Test these previous breakout levels, and I did.
Right.
Probably no one else is charting them. Like the buyers aren't using the charts. I know that much, right?
Right.
So just human nature is the way it happens. I can't explain why it works this way, and when no one's charting it,
Yeah.
So I anticipate a pullback to that 81 levels, and that's a 50% retracement in the price of farmland.
Yeah.
And if we go back all the way down to this other support and resistance level, which is quite a drop, that's 80%, which is hard to imagine.
Yeah. Yeah.
It's too early to talk about it.
Even 50 is hard to imagine, Trent. But
50 is hard to imagine. Yeah.
I guess when I take a look at the industry right now, financially, I think overall, I think it's pretty healthy, right? I do think there's some issues out there and maybe more are brewing. But I think in terms of the creditors and the lenders, they've got a pretty good security margin, right? Like they maybe lent 75% of what the land is worth. So like in my past experience, I kind of found that, while there's that equity in there, land values are going to maybe fall, if they're going to fall, a little bit slower because it's on their dime. But if you go back to the 80s, and once we kind of broke through that level, whether it was 80% or 90%, once you go through that, there really is no bottom, because now there's no equity, right? And that was really evident in the, financial crisis in the States with the subprime mortgages, right? Everything was 100% mortgaged. And once it started to go down, there was no floor. So I do think if you got through that level, it could keep going.
Yeah. There's nothing to say it can't.
Yeah.
And I honestly, I believe, just because I'm a technician, that we see a 50%. I think a 60%, but let's talk 50% right now. Just because I see it happen in every other asset class of 60% retracement. And then possibly another rally up to higher values. But there's a lot of, I don't know how deep you want to get in that rabbit hole today, but
well, yeah.
But it's anyways, it's an area of interest to me right now. Level of interest is
well, and me as well, right? With our business, this is what we get paid to do, and people say, where do you think it's going, right? And I just talk in probabilities, right? Because I don't know what's going to happen. I just know that there's more buyers than there is sellers, or there's more sellers than there is buyers. If things are going to change, they usually change in September after the harvest is off, right? So, and we have different strategies for different people depending on whether we think it's going down or going up, or all that kind of stuff. So I do see a tremendous amount of strength still in it, Trent. But like you, I'm starting to see a few cracks kind of appear in it. Another really interesting thing is rental rates are jumping. And everybody is, well, why are rental rates going up? Well, do you know what? Rental is a substitute for purchasing. And so now when you take a look at $3,000 an acre land at 6% interest, that's $180 an acre. I think my math is right there. You can rent that for 120. Maybe you should do that. And then short term, and you can renegotiate after 3 years. So we're actually seeing rental rates increase. I think that's really interesting as well.
That is interesting. Yeah. So it signifies to me a strength in the industry.
Yeah.
Which suggests maybe.
Well, instead of purchasing, they still want to expand, right? But instead of purchasing, maybe we're going to do a rental arrangement.
Yeah.
Yeah. We're just going to see what happens in the next 3 years. So.
Yeah. Well, to me, it's just a fascinating time to be alive. I mean, what's going on south of the border and the ups. Yeah. There's a change of the world order happening. It's happening quicker. I think the way we've done business is going to change. I think with interest rates, I'm really interested to see what happens with bond yields and see where that goes.
So many factors that can affect it, right? But that's where I think that we can't predict, or say with certainty that no, it's not going to fall, right? Because we don't know what's ahead of us, right? And history dictates that it does kind of retrace. So maybe this time it'll be different, though.
Well, yeah, it very well could be. And and if your timing, right? If your time frame is in the centuries, I guess it probably maybe doesn't matter, right? But decades, maybe it doesn't matter.
Yeah.
But there's the in 81 to 80, like so that took 12 years. I'm not sure when the proverbial shit hit the fan per se, but it was sometime around 90 or something, right? It took a long time for really...
Probably 88, 89, somewhere in there, yeah.
Yeah, it took a few years before things really came to roost,
Yeah.
And...
in Saskatchewan.
Yeah. Yeah, and the psychology aspect of it's really fascinating to me, too.
Yeah.
Where this goes and...
Yeah. Well, and I think what'll keep this kind of sticky too is that, farmers do tend to, be multi-generational, right? Even if you're 80 years old, you are envisioning your grandchildren with this land, right? Yeah. So you are thinking 60 years out there. So. Yeah.
And the values are such now that you maybe don't need to sell for your retirement anymore, right?
No, that's very true, right? You don't need, whereas in, the early 2000s, you did need to do that. If you were farming, and you wanted to retire, you had to sell your farm, and that shifted in 2010, where no, you didn't. You had enough resources to do what you wanted to do and rent out your land to kind of do it.
Yeah.
Which also shorted the supply of land.
Yeah.
Yeah. Which, drove it up even higher, right?
Yeah. Oh, maybe this time is different.
Yeah.
We break out above that upper channel and we continue moving on a parabolic move higher.
Yeah.
I think, what did Farm Credit, what they report the land values went up in Saskatchewan?
I think it was about 13%.
13%. Yeah. That's 1 year, right? That's significant.
That's 1 year. Yeah. Well, and what's interesting about that is Alberta was about, maybe a third of that, but it's basically the same dollar per acre, right? Because farmland values in Alberta are 2.5 times higher than Saskatchewan. So even though their rate, the rate of increase is lower than Saskatchewan's, the actual dollar per acre was about the same.
Interesting.
Yeah. Yeah. Fascinating stuff. So, So anyways, this is a great conversation, Trent. And I really find it, intriguing because I like contemplating kind of what's ahead of us and just helping people think about what's ahead of them. Yeah. So what's probably the number one thing that you took away when you did this analysis?
Well, for me, it just kind of shows to me that human behavior doesn't change.
It's predictable.
Yeah, and just from my last 3 years, and I'm introducing TA to rental charts,
right?
And I'm seeing these same behaviors across all asset classes. I understand the stock market, you might have algorithms, you might decide to buy the S&P 500 a 50% retracement or a 60% retracement, right? That's to be expected or anticipated. Yeah. When I see that in Saskatchewan Farmland, it really starts to get my interest and start to wonder what, there's a lot of questions and theories that can be derived from that. But to me, it's just fascinating how human behavior remains the same.
Yeah. Yeah. My takeaway from this is just, knowing the past events and what happened and just, all the analysis that kind of goes along with it. It really kind of gives support, to what you're saying and what you're seeing based on the technical. So it's, it's another way of looking at it, right? So.
Yeah. And I think it's important to remember it's not a science.
Yeah.
I spent a lot of time looking for that holy grail indicator. There isn't one, but it's a bit of an art, but it can give you some ideas and prepare you for the future. You look at this chart, and even just from a pure support and resistance levels, there's trends change. Trends are the same across all markets. When you make a new high, likely leads to new highs, and you could see that in around 2009, 2010.
Yeah,
and that would have been a great time that would have been the best time to buy, right?
Yeah.
The lowest risk time to buy.
Right.
From 1981 to 2010, roughly, right?
Right.
That was the lowest risk time to buy. Not the best return, but the lowest risk.
Right. Yeah. Because you knew the fundamentals were saying we're definitely moving up from here.
Well, yeah, and even without even knowing that, just looking at the chart and saying, "Oh, we're breaking out to a new high."
Oh yeah.
So new highs often lead to new highs, and we're above that EMA, right?
Yeah.
So it's just fundamentals are really drive the market, but you don't need them. If that makes any sense. So.
Yeah, it does. So. Anyways, this has been just fascinating, Trent, and I really appreciate you taking time to kind of share this with us and go through it and explain it and, add your insights to it anyway. So I really appreciate that. So thanks for doing that.
Oh, this has been great, Tim. I've been looking forward to collaborating with you for a lot of years. So this is fun.
Well, this is great. It's the number one of many more to come, maybe, perhaps. So
yeah, absolutely.
Yeah. So anyways, thanks everyone for kind of tuning in. If you have any questions or you want to reach out to Trent directly, we'll have his information on the screen or maybe down below. But feel free to do that or, reach out to us and, pick our brains a little bit more on it. So thank you and for watching this. Yeah. And we'll see you on our next one. Yeah. Okay. Bye for now.
Bye.